Hello, loves. It's your girl Jay with JSC Bold and Unlimited. And y'all, it has been a long day, but I'm still coming to y'all live, of course, for all my young and fun millennials out there that just want to hear from a sister, right? Okay, so today I want to talk to you guys about banking. Now, last month in March 2023, everybody was just running around, just panicking in the Bay Area. Like, oh my gosh, Jaleesa, what's happening? SVC is failing. And I'm just like, guys, why are you worried? Silicon Valley Bank is literally a medium-sized bank, right? So I was curious why people were panicking, because I'm like, okay, are you a startup company? Are you a tech company? Do you even have money with Silicon Valley Bank? Like, why are you panicking? So newsflash, guys, Silicon Valley Bank is a medium-sized bank. Although they did fail, another bank, Signature Bank, fell right behind them. And of course, FDIC, the Federal Deposit Insurance Corporation, something like that, came to back it up. Of course, if there's no buyers, that's what happens. But guys, what I'm trying to say here is, although we may see banks failing right now, currently in 2023, this doesn't mean that it's the end of the world. This doesn't mean that we're going back into a recession or anything is like that. It's happening. Basically, these companies just had too much debt and was not able to really pay off the bill, right? And maybe their customers weren't paying them. So what does this mean for you as a consumer? First of all, Silicon Valley Bank is not a big bank like Chase, Wells Fargo, Bank of America, those banks, right? When we start hearing that those banks are failing, you should be concerned. We might be in an apocalypse, right? Okay, Now, what does that mean for you as a consumer? As a typical consumer, you should not be worried if you have $250,000 or less in a bank, not a branch, in a bank total. Your money is insured by the FDIC. So, boo, what you worrying about? What? Like, really? So all these people kept asking me, Jaleesa, what do you think? What do you think? What do you think? And I'm like, guys, do you have more than $250,000 in that bank or in a bank? If you don't, then I'm not sure why you're too concerned. Now, the startup companies should be concerned. And I say this, right, because they still have to pay back their loans and all the other stuff. They still got to meet payroll. There was some businesswomen that I was with when this happened. We had a conversation and like, Jaleesa, oh my gosh, I have clients that are with, Silicon Valley Bank. And I'm like, okay, I get that, it happens. So let's have a conversation about what happens next, how this is going to affect you and your business, different things like that. But for the typical consumer, like, if you don't have over $250,000 in a bank, you're not going to be affected. Now, what I want to say to you guys is we have to start banking differently. Why? Because honestly, if a bank failing makes you so into like panic mode, that means that you're not managing your money properly, right? You're not diversified. You're only in a bank. If you only have money in a bank, you are losing, guys. You are losing. For all of my millennials, Bay Area, anywhere. Like, if you only have money in a bank, you are losing, okay? Now, what I want to say to you guys is, honestly, it could have been a smoke screen when this happened. That's why I thought, I'm like, maybe this is another smoke screen. Like, something big is happening in the world, and we're trying to cover it up with Silicon Valley Bank, failing. But guys, I honestly don't believe that it was a smoke screen. It was just something that happened. Unfortunate event, of course. Did you guys know? Side note, did you guys know that the Iraqi war ended in 2021? Like, I was so shocked to find that out, because during the pandemic and the shutdown, like, the only thing they was talking about was COVID this, COVID that, blah, 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 right? And the news was using all these scare tactics. And I'm like, the main news stream never really brought up that we brought troops home, that the Iraqi war ended. I'm just saying, this could be a smoke screen, but I honestly don't believe that it is one. Another thing that I want to bring up with you guys is you got to start banking differently. Like I said, if your money is only in a bank, you are doing it wrong. Okay, let me give you a quick tip on how you should manage your money, how you should invest your money. Guys, really quick, for every dollar that you put into a bank, they're able to loan out $9, okay? So for every dollar that you put into that bank, 90% of that money doesn't even exist. It's just numbers in the system, okay? Now, for every dollar that you put in an insurance company, $9 is put on reserve. So guys, I'm telling you, look at the difference. So just weigh it out. So I put in $1 and the bank loans out, $9. I put in $1 into insurance and they reserve that $9. So guys, you have to understand how banking works and that it's not in your favor. The banks are in the business for themselves. They are in lending, right? Guys, think about it. When you have a savings account, your savings account is at 0.1%, like annual interest earning rate or whatever. Some people are like, oh, I'm at 1%. I'm doing it. No, you're not, right? Because the banks are loaning that same money out that you're putting in. They're loaning it for 24%, 8%, 6%, mortgages, homes, car loans, all these things. So you're really not making money. So I want to encourage you guys, if you haven't checked on your finances this month, do it, because April is Financial Literacy Month. And it's time for y'all to take control of your finances, take control of your wealth, because that is so important for people these days. And it keeps you out of the panic mode. If you're just staying up to date with what you got going on in your life and how your finances look, not only how much you're spending, but how much is coming in, how much is going to savings and invest in different things like that, definitely do that. So all I want to say is, guys, start banking differently. Yes, the startup companies likely, should be concerned because different things happen with them. But you, as a typical consumer, if you have less than $250,000 in a bank, FDIC has already insured it, so don't worry about it. Chill, grab a glass of wine. Okay, y'all. Have a good night. It's your girl, Jay. Like, subscribe, comment. Y'all, I want to have a conversation. I'm always open to learning something new. All right, toodles.